We are building this to a scenario where we'd like to be taken out. If we hit all these milestones, there's a chance for shareholders, not to make a double or a triple, but I think we'd be vaulting towards a $200 million market cap or larger. That's what we're looking for.
Great update.
That's it. That's it. Wait for results and let's watch our market cap move.
There you go. Mining is as simple as that, folks.
Welcome to Crux Investor. Thank you so much for watching this video. If you like it, give us a thumbs up and do leave your comments below. It just helps us understand the types of questions you'd like us to ask, how we're doing, and indeed what you think of the company. If you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And of course, for more videos like this, click the notification bell. We spoke earlier to Jim Greig, who's the CEO of Benchmark Metals. They're a TSX listed gold silver explorer. Now, they're looking to deliver 50,000 meters worth of drilling this year, give us a mineral resource, and deliver a PEA. Now, the track record of this team suggests they should be able to do this, and they've got funding in place to do so. So quite an interesting story to follow. Take a look in the description below to look at some of the topics we discuss. Anything there that interests you in particular, click on the relevant timestamp, and that'll take you to that part of the video. So in the meantime, let's hear what Jim had to say.
Hey Jim, how you doing, sir?
Very good, thank you.
Good, good. Thanks for joining us today. We haven't spoken since December. A lot's happened since then, so I guess we better talk about it. But first of all, give us that 1 minute overview for people new to this story.
Certainly. So Benchmark Metals is a gold and silver advanced explorer in northern British Columbia, Canada. We've got a road accessible project. Doesn't need expensive helicopters. We are fully funded for a large program in 2020 with over $10 million in the budget. And we're embarking on up to 50,000 meters of drilling, followed by a new mineral resource estimate. And on the heels of the resource estimate, we will be planning to complete a new scoping study. That's a preliminary economic assessment.
Okay, that's it. We're done, aren't we? That's great update.
That's it. That's it. Wait for results and let's watch our market cap move.
There you go. Mining is as simple as that, folks.
Yes,
let's get into it though. Okay, because when we spoke, you had 5 million in the treasury. You're raising another 5, giving you circa 10 million bucks, and that kind of, you were telling me, would see you through to the end of this year, I guess, to achieve your, up to 50,000 meters of drilling. So let's talk about the drilling. Where are you focusing it and why?
So in the heart of the property, we've got 5 zones. They're all within approximately 3 kilometers apart. These zones were formerly producing, or several of these zones were formerly producing over 30 years ago, where they were mining very, very high grade. The difference in the story this time is we believe, and we've shown through current drilling, that there's bulk tonnage material from surface down. So we foresee what would be several open pits at surface. And the drilling builds upon results from 2018, 2019, but also historical data from well over 30 years ago.
Okay, and again, just to remind people.
So we're extending the zones.
You're extending the zones, but it just remind people of the kind of structure of, what was there before, because this is an old mine. People were chasing high-grade veins. But you're coming at it from a different angle, different strategy. So if you talk us through that.
That's right. So when this mine, the Cheney gold mine was producing, they were mining the 1 to 5 meter, very high grade veins that, grade coming out of them was approximately ½ an ounce or larger. And, those are narrow subsets. But after a revisit of drilling in 2018 and 2019, we're showing that mineralization does indeed begin right at surface, but can extend for up to over 150 meters of moderate grade. And when I say moderate grade, I say that loosely and proudly that, you can see average grades of anywhere from close to 2 grams over long intersections. But we've also seen 6 grams of near 36 meters from surface. So, 30 years ago, 1 or 2 gram material over large lengths was not economic. But 30 years later, it's very economic in most situations.
And that's because what? The recovery is better these days?
Recovery was actually quite good back then, but it was all about gold and silver prices.
Right.
So now we're at a $1,700 gold price. Back in those days, I think you were looking at approximately a $300 or $400 gold price. So multiples on the commodity price compared to when they were operating back then.
Okay, so and again, I want to remind myself about what's the game plan here, because we get the strategy. It's a bulk play with some potential high grade upside, but you're drilling 50,000 meters. What do you expect it to be able to tell you? Because if you're going to put out a resource, you must have a number in mind.
That's right. So we're targeting multi-million ounces after this next round of drilling. In February of this year, we put out a mineral, or rather an exploration target. And this target was based on data from one of the 5 zones. And we put out a range of approximately 1.7 to 1.9 million ounces in one single zone, keep in mind. And that had an average grade of approximately 1.7 grams per ton gold. We believe with this next round of drilling, we can expand that zone, in addition, increase the grade of that zone, but also bring the 4 other zones into a mineral resource estimate. So the message in February was this was a baseline, a starter that we were looking to achieve, and we think we can move well beyond that potential.
Okay, and then obviously quickly following on from that, a PEA, you're getting a sense of the economics of this thing, especially in a gold bull environment. People are keen, well, funders are keen for people to get into production early. Are you tempted to try and accelerate it? Because you did talk about a fast track to production scenario with me in December. Is that still the plan?
That's right.
Right. So what does that look like?
Yeah, we are indeed fast tracking. In 2 years, we've advanced this project very, very quickly. Given that it's a brownfield type of play where there's a footprint of former production, that allows us to move much quicker towards a production scenario. With that 50,000 meters of drilling, we're also engaging on completing some metallurgy. We have First Nations agreements signed and in place. We're already preparing for additional work in order to complete that preliminary economic assessment. So all the boxes that we're ticking are geared towards completing as much as possible in a short time frame.
Okay, but that's kind of easily said, right? So a PEA
yes.
tells you so much that no one's going to get interested in a company with a PEA unless it's showing something spectacular. There's a big room for error margin in a PEA. Where are you guys taking it through to, and what point do you exit?
Like any junior with a very good project, of course, we would like to exit if a major company came along and offered an attractive value to shareholders. And so this is always in the back of our mind, how we create and generate more value for the company. And so part of that is because we are road accessible and there is a footprint from former production, it allows us to move ahead much quicker, and such that we're not cutting new roads. There is some metallurgical numbers from the past. 93% gold and 78% silver is what they achieved 30 years ago. It's a sophisticated area with the First Nations. There's a world-class gold copper mine within 45 kilometers of our project. So this is a proven and prolific area where you can build a mine. And we believe that with our treasury set at just over $10 million, we can achieve these 3 milestones within about a 12-month period. And I think that's a remarkable feat, given we are working in Northern Canada. And we do not need to go back to the market to acquire or build more capital in order to get this done.
But I get, what I'm trying to get at is at some point you will, unless you've decided what your exit point is, right? So you've got enough money to see through to the end of this year, and then you will need to go out, and if you are going to develop this yourself, you're going to need to raise some capital. But you're talking the language of someone who's building something for sale. Is that right?
Correct.
Okay.
Yes.
So you know what your skill sets
absolutely.
are, and you know where you're going to take this thing through to, and you're building it to be attractive for someone else to finish the job.
No question. That is the response. We are building this to a scenario where we'd like to be taken out. Yeah. Yeah. Look, our skill set within management is very good. Senior management's been involved in new discoveries. We have put mines into production. So we've gone the full cycle of discovery to development, construction, and then finally production. But the biggest win for shareholders here is to be on the path where you go from advanced project and then finally building it towards a large resource and then showing economics that are very viable. We think we've got all of those boxes ticked in a short time period. There's some cataclysmic major moments for us. And, I've mentioned them several times, but being able to fund and pay for these 3 events in a 12-month period is quite a success story. And we think, if shareholders and new shareholders look at the results we've seen over the past 2 years, it's an example of what can be achieved here. High grade that's embedded within large bulk tonnage type material at surface that can be recovered from very good results at the mill. And, we're looking forward to a robust year here with some very good news flow.
Okay, and tell me about what people would be buying. You're going to say we're going to build a large resource, we're going to have a PEA in place. What are some of the infrastructure components that are there? You talked about roads, I'm assuming power, water, all of that kind of good stuff. But what would someone be walking into?
So for a new suitor to be looking at this project, they would be looking, of course, as you said, access to site with roads that are already established. There's a large power line that goes to the Kemess copper mine, which is located 45 kilometers away. So there's potential for a tie-in point there. The topography of the project is very sort of undulating or flat rolling landscape. There's no trees. There's very little disturbance with environmental and wildlife matters. As I mentioned, we do have First Nations agreements signed. The First Nations groups have been very cooperative and working forward with us. Their interest here is simply to have good job training and to have new jobs into the future.
Okay. Any issues with licenses, permits? What are the kind of big red flags here?
No, we're fully permitted with a 5-year notice of work that allows us to do all the drilling that's needed.
Okay.
That was granted to us last year in 2019.
Okay.
There's at the moment there's no major obstacles other than we need to show these results, and given the results that we had over the past 2 seasons, I think this is not a pipe dream. This is a reality right now. This company has a $35 million market cap. We believe we're undervalued. And if we hit all these milestones, there's a chance for shareholders, not to make a double or a triple, but I think we'd be vaulting towards a $200 million market cap or larger. That's what we're looking for. And that's the entry point in this company. The cash is there in the capital to get in the treasury to get results. When we hit and get news flow and produce these major milestone events, that's what all shareholders are looking for, is a major win with multiples. It's a risky game here, but the management are also big shareholders in the company, and we want to share and win with the gains of other people.
Okay, so you've talked a good game. You've been clear about what you're trying to do. You're saying it's quite attractive in terms of infrastructure, and you've listed out what you're going to be able to hand over to someone at the point that they, come and talk to you. So it begs the question is, rather than kind of say we've been there and done it before, what have you done? What are the companies where you have created shareholder value before? I want to know about your ability to deliver it rather than just talk about it.
Sure. So our senior statesman of the company, John Williamson, who's our CEO and chairman, John originally was a big shareholder, but at Kaminak Resources, he was a director and original founder of the company. Kaminak, back in 2016, I believe, was sold to Goldcorp for just over $500 million. You know, that's quite a win there. In my past, years ago, I worked with Keegan Resources, Ivan Bebic and Sean Wallace and company. And we took a company from 25 cents to near $10. We built a mine in West Africa and created some tremendous wealth for shareholders along that ride. And there's other names within our group that have an established track record as well. So we're working with a professional group of management here who have built mines and put them into production. And all of us participate in the private placements. So we are indeed large shareholders, and we were looking for wins along with the regular retail shareholders.
Okay. When we spoke last time, you were going out and talking to institutional funders. Retail is a part of the story, but it wasn't the whole part of the story. You're at 35 million bucks now. You want to get to 200. You've talked about how you're going to do that.
We are at a point here where we have some institutional support. Our raises in the fall of 2019 involved Sprott and Eric Sprott himself. That also involved getting some institutional US involvement in the story. And I believe that's part of the path forward here as we build the market cap at some point in a 12-month time frame when we've hit these major milestones. We'll be in a very good position to seed more institutional money into the story. But we will not be doing that until the market cap is achieved a much higher level, of course.
Okay. Gold price obviously significantly enhanced since August, September last year. Do you think it's a much better environment for some of these catalysts to get noticed? Because I think last year catalysts came and went, no one cared.
Yeah.
Do you think now that gold is back in favor, you're going to be able to capture some of that? You said, you talk about being undervalued, right? So do you think you're going to be able to recapture some of that value quickly?
Yeah, I think there is a movement, of course, towards gold, but the first step to making that happen is investors need to be shown that gold mining is a real business. And what you're starting to see over the past several quarters is that the gold miners are producing some exceptionally good earnings estimates, not only estimates, but truly are reporting earnings that are over and above expectations. And as the gold price increases, well, their earnings only improve because they kept a very good lid on their costs. And so they've created some good margins. And with more successive earnings of beating expectations, at some point, that trickles down to the junior miners such as Benchmark Metals.
Do you think it's true? That's what I was getting at, because I think the producers have seen a re-rate because they're creating free cash flow in a lot of cases, which is great. But how does it trickle down and affect someone like you?
Well, what happens is eventually all of these producers need to start replacing resources in gold ounces. And that actually started years ago. So, the catalyst for a major to take over a company like Benchmark Metals is quite simple. They are a business where they mine gold and they deplete their gold resources in the ground. And at some point, they've got to put new ounces back on the shelf to mine. And that's where a company such as ourselves becomes attractive. We're in a low-risk jurisdiction. We're advancing the project quickly. It's an open pitable type scenario. The capex should be well within reason compared to other jurisdictions, and we believe we will indeed be attractive once we complete these milestones over the next 12 months.
Okay, exciting times, Jim. I guess what you're working towards is being able to show something around the economics to make sure you are as attractive as you hope. So Keep in touch with us. Let us know how you're getting on. Seems to be a quick succession of news flow, so we'd like to hear from you.
Very good. Always a pleasure to be speaking with you.